It's a very special conversation today. We have the leadership circle of Titan, India's biggest wealth creator over the last many years. We have with us the MD of the company, Mr. CK Venkatararaman. We also have with us Suparna, who heads the Watches and Wearables business. Alongside that, we have Ajoy, who heads the jewelry business of the company. And joining us today is Saumen, who heads the eyewear business. So basically, we're trying to cover all bases of Titan's growth trajectory going forward. As their analyst day said, turbocharging for the future. Thanks a lot, gentlemen and lady, for joining us today. From where you stand at right now, what is it that you see and what are the opportunities?
You know, we got into multiple categories over time. And in almost every situation, we chose categories which are underserved, underpenetrated, unorganized. And that's been a strong formula for the company, virtually right through. And so Eyecare came in, 2005-06 time. Then 2013, we got into perfumes. 2017, we got into Tanera and the Indian ethnic wear, and more recently into bags. So all these categories are, defined by those dimensions that I said. And in each one, we see tremendous opportunity for organizing, for serving customers better.
If one was to take the key takeaways from each of the presentations that were made today, it all points towards a cumulative revenue of almost 75,000 crores by FY27, a journey that you guys had spelled out earlier as well. Ajoy, I'd like your thoughts first on the competitive intensity in the jewelry space. What would you do to turbocharge growth in the jewelry business going forward?
I think competitive intensity in jewelry has always been high because it's an unorganized market and large number of players. It's also a huge category, right? It's about 500 to 550,000 crores. And obviously it's going to attract more and more players. But for us, we are still, high single-digit growth market share. We are only at about 8% market share. So the headroom is huge, both in terms of share gain, as well as if I look at the dispersion of segments, be it markets, as well as maybe different segments, be it high-value studded, be it wedding, regional markets. So the opportunity for us is huge, including the small town opportunity. Middle India is a huge base in India. There are 500 towns in the 1 lakh to 1 million population strata. And we are present in only about 180 of those. While we don't know if all 500 towns will ever get ready, but the headroom again offers a very large opportunity for us. So all in all, I would say the share gain opportunity is so huge that even if 5, 6 more big players or competitors come in, there's opportunity for everyone.
So to that extent, say over the next couple of years, what would your store rollout plan be and what's your aspiration here?
Over the next 3 years, we see, easily we can add about 100 plus stores in Tanishq. We can add about 150 to 200 stores in Mia, and certainly 100 plus to 150 stores in Carrot Lane. Zoya also there's an opportunity, but there we are not looking at large number of stores. So in totality, the opportunity to add 300-400 stores is very comfortable.
One of the concerns that the analysts had, was the ability for the company to grow its margins from current levels. In fact, 12 to 13% was the guidance, saying that over the next couple of years, it may be at the lower end of that space itself. So should one believe that these issues right now are structural, or are there levers to improve them further from here?
I think at an overall domestic jewelry business, we shared that EBIT margins would be anchored around the 12% mark. And while there will be ups and downs quarter to quarter, but on an annualized basis, that's where we hope to. I don't know about growing the margins. Yes, with a certain operating leverage, it can grow. But in the medium term, we expect it to be around the 12% mark.
The wearables, the way they are growing extremely fast now at around 13% of the portfolio, what is the delta at which it is likely to continue to grow? That's one part. And the other part is the luxury watches that you all spoke about. Give us a sense of the scalability there.
So for the watches and wearables division, these two are the big growth levers. The premium watch business is something that we have gotten into with great gusto only over the last year or so. And we have brand play with brands like Titan Edge, Nebula and Xylus. And these brands are doing exceptionally well given the overall premiumization wave in the country. So that vertical will do very well. It's both because of the opportunity and the tailwinds, and also because of the exceptional work that the team has done in terms of design, horology, including materials, our own movements, finish, as well as the retail side, really improving the customer experience for buying premium watches. On the smartwatches side, after explosive growth for 3 years, we see a certain cooling off. Also, a lot of price wars are going on. So, at this point, we are very focused on our own portfolio. We have fast track smartwatches, which are really between, say, 1,200 to about 5,000 rupees, and Titan smartwatches, which are above 5,000 rupees.
And what would good growth in terms of numbers be according to you?
That's hard to say right now. Like I said, after 3 years of growth, IDC is actually predicting 0 or even negative growth. So at this point, we are looking at a good double-digit growth, but it's a pretty volatile situation, and we would wait and see how that pans out.
For the overall portfolio, what would your projection be? Say mid-market and the luxury end, which is doing a lot better. So if one has to, look at your watches and wearables portfolio, segment it, and say these are the ones which will be growing faster, these are the ones which will be growing at average. What would that be?
So premium would grow very fast on a much smaller base. The mainline analog, which is a large base, would grow around 15%. The overall portfolio is likely to grow between 15 to 20%.
And how much is premium as a percentage of your overall watches and wearables portfolio?
Right now it's small. It's much smaller.
5% or a little less than that?
Premium is right now about 6-7% of the overall analog business.
All right. With the kind of valuations that we've seen for some competitors, a lot of people are beginning to ascribe some value to the eyewear business as well, some of the analysts, etc. So wanted your thoughts on what your aspiration here is in terms of revenue, in terms of earnings, and the kind of value that you can create for this vertical.
This whole industry is now a two-horse race. There are only two real players, and rest of them are finding their ways. And there is a lot of hype about this industry. In reality, there are not too many people who can claim they made huge turnover and made a lot of money. That actually has not happened. We have now built a solid foundation of a business which is consistently profitable, and our ambition is to almost double our current top line in another 3 years' time.
Even if you double it from what it was, say, last year in the next 3 years, you would still be half of what the other competitor was last year. And the other competitor also became EBITDA profitable. So would you say that in the eyewear business, maybe Titan was a little more conservative, perhaps than the other competitors?
We have chosen a path that has brought us here. We have chosen another trajectory that will take to the ambition that we think is appropriate for us. And as far as we are concerned, we are serving our customers well. By 3 to 4 years' time, we should be serving about 10 million customers well enough. And I think that should give us a lot of happiness.
Right, fair point there. But Ajoy, I have to ask you this. Tanishq, strong brand, mother brand when it comes to the jewelry business. But a lot of people are now looking at jewelry as adornment, so which is why you all, spawned other brands and scaling that up as well. If I had to look at one of your group companies, Trent, they, got a big upsurge in the value category with Zudio. So is there a potential for Zudioization of jewelry in the Titan business?
Good question. Perhaps there can be. But the difference, I guess, between the two categories is that there is a certain price sensitivity when it comes to buying garments and maybe other categories. In jewelry, there is a mix of both adornment and investment value. It's not one or the other. In terms of sheer number of buyers, we do see good opportunities even within Tanishq as well as CaratLane and Mia, adding to large number of buyers. So from a buyer base, yes, but because the value of gold and diamonds is so high and gold is also going up, the total value turnover may not follow the same trajectory like that might happen in garments. But you're right that in the sub 100,000 space, large number of buyers can come into our category, and we should look at that opportunity.
Since there are a lot of players, do you think it makes sense for now Titan to make a move there, maybe acquire some people out there, or maybe just organically start and grow in that part of the business?
I think the competitive intensity is not as strong there. There are some new players which have come in. The competitive intensity in the mainstream business is much larger. In the sub 100,000 studded space, I think it's a matter of growing the category. And as more and more players come in there, many more millions of customers can come there. And we have 3 brands which play strongly amongst maybe a cluster of 8 or 9 brands which might be existing there. So I think right now we don't need to add more brands there as much as allowing organic growth to happen. And we are doing that through adding significant number of stores and collections.
Are you comfortable with the growth rate at which CaratLane is as of FY24? Because if I look at it, FY21 was a sub 700 crore business, thereafter turned into 1200 crores that grew to 2200 crores. So the CAGR between FY21 and FY23 has been a lot more than what it was in FY24. So I just wanted to understand the sustainable growth rate for a company like CaratLane.
So FY24, CaratLane grew at 34%.
Yes.
And while the CAGR over the last 5 years is around 47%. So yes, comparatively, but the base has also gone up. Now, last year, there was a certain significant pressure that I think started coming in maybe post Diwali. And therefore, certain growth rates in many discretionary categories came under pressure. And in the studded space, I think the customer segment that was operating, especially in this sub 100,000, has come under some amount of economic sentiment related issues. But I think what is an appropriate CAGR? On a small base, you can show a CAGR of 40-50%. But at the base at which CaratLane is, I think 30 to 35% CAGR is good. I don't think the market is growing at that rate. So it's a good opportunity.
If you look at the trajectory of the company, when it started growing its watches business, yes, it was a white space. You all captured that space. And then there was jewelry, a lot of unorganized players out there. You all entered, you all had the headroom. Almost 20 years of unparalleled growth in the jewelry business. If I was to ask you, what do you think are the next 3,000, 5,000, 10,000 crore opportunities for Titan? What would you say it would be?
One clearly is Taneira. And Taneira operates in a 50,000 crore sari industry and a 100,000 crore plus ethnic women's wear industry, and we are betting big on Taneira. The second is Tanishq outside India. Is a huge opportunity, and we've just declared a $500 million goal, and that is doubling every year. The other businesses that we are in are the categories are smaller, whether it is the perfumes category or the women's bags category. They are rather small, I mean, in relation to the figures that you described. But our aim is to become the dominant market and thought leaders in both of those. The women's bags, we are super excited. The feedback to our brand has been very good, and the next 2 years we'll see scaling of that as well.
Is it just women's bags, or are you also looking at some other luxury, categories like luxury luggage or other things that, because the profile of a Tanishq customer would suit to sell all the other luxury products too as well, right? I mean, there are a lot of players there.
It would. It's just that, these 2-3 categories which are between now 10 and 5 years old, we are yet to do full justice to them. Therefore, from a organizational effort and prioritization point of view, we want to make these de facto leaders in each of these categories before we venture into the fourth or the fifth.
So no new categories being seeded as of
Nothing
now.
as we speak, no.
And the premiumization in watches also brings with it some competition. Now it's getting a lot easier to buy a Swiss brand luxury watch in India than what it was, say, 10, 15 years ago. Would you see that as a bit of a headwind, and as a result of which maybe you get into retailing other brand watches as well, and that overall seeds growth for you?
It is something that we are considering. We spoke about Project Zeus, where we are looking at multi-brand retail of affordable luxury, not so much at the very high end, not absolute luxury, but affordable and aspirational luxury. And we are in the process of building out a very solid customer value proposition for buying these brands in our store. So the store proposition is currently in the process of being formed. It's going to be really quite a big thing in the next 5 to 10 years.
Is there a way you can get your products faster to the consumer than what it currently is, and what's the kind of approach here?
One, of course, is our retail footprint would expand and probably expand quite rapidly.
What's the number there?
Yeah, so FY27, I would expect not less than 1,200 from 900 today. But we do believe we can solve for the single vision customers' requirement online, and more people, once they experience us, they would have total confidence to order online. This is going to happen, and the partners like Amazon, Flipkart are also quite likely. They don't play prescription eyewear. They would probably work with us to make sure that the reach is way bigger than what we could reach as a mono brand. So speed, access would probably come together.
Are you considering QCOM for sunglasses?
In fact, we are just starting.
Lab-grown diamonds. Everyone's talking about that. It's the buzzword. We can see signs of that in the US, etc. Does that have you worried?
Not really. I think there's a lot more buzz because a lot of investment in India has happened in the lab-grown space. I think there will always be a segment for precious jewelry because the preciousness comes from the rarity of the product, and therefore, rare and precious jewelry will always be there. Is there an opportunity for lab-grown for some other segments, maybe in fashion, maybe at the entry point? Possibly. But right now, most of the action seems to be concentrated on the more traditional kind of big stone, center stone jewelry, even in the US, which has a very different dynamic here. So one doesn't worry about it. I think any development in the industry, one should always view it as an opportunity, not as a risk.
You have made an investment in one of the lab-grown players as well. So just wanted to know what your plan there is.
No, see, the investment was a small strategic stake in a company which is a very small player. It was more to get a first-hand view, a ringside view of what is happening with the consumer in that market, in the US. And most of it is being bought because it is big rock at small price. Whereas in India, the big rock is seen as a stored value of the asset.
If there are a lot of big rocks being bought at smaller prices, then there is capacity in the naturally occurring bigger rocks, and as a result of which their store of value attractiveness declines. Is there a possibility?
It's possible because none of us can guess the future. But the people who are buying, let's say, firstly, a large part of the diamond business in India, and especially in the categories we are in, is sitting in the small stones and in the adornment space, not so much in the big rock. The big rock, most of the people who are buying big rock in India are buying it because there is also an asset value to it. Now, if that customer segments stop seeing value in that and they see something else, that's fine. It's possible, it can happen. At this point in time, one is not so clear because even people who are entering the diamond category or even beginning to buy a small solitaire, they are actually wanting, for them this is a very big occasion and it's a very important piece. There's a lot of emotional connect. So they are not comfortable trying to buy something which is experimental. The ones who might be more open are the ones who already have enough jewelry with them. So I don't think it's a worry, it's an opportunity in fact, I would say.
So you are mindful of your studded share. Do you have a target at some point in time where you would like your studded share to be a certain percent from the 33% that it is currently?
I see these as two businesses. There's a gold business, there's a studded business. Now, if the gold business happens to be growing faster due to more interest and excitement or wedding or anything else, then so be it. As long as we maintain a steady and healthy double-digit growth even in studded, we are fine. So the ratio is not important. You know, the ratio is an outcome.
Okay. Next 3 year CAGR on the revenue and margin aspiration.
20% plus CAGR and about 12% EBIT margin.
How about you?
Again, 15 to 20% CAGR, 12 to 14% EBIT margin.
It's 15 to 20% CAGR on revenue and anchoring the EBIT around the 12% mark.
For all the other businesses, they'll have to ask you.
The sum of all this.
At what point do they turn profitable? And
We're looking at all other businesses, reaching a break even, together reaching a break even by FY27.
Right. What is it that you leaders talk about amongst yourselves when you all generally get together when you're talking about the company? I'm very curious to ask.
A lot about the people of the company and how we can keep them excited, engaged, motivated towards everything that they do.
Anything that worries you in particular, Ajoy?
What worries me sometimes is, are we innovating enough? And are we missing something exciting that we can learn from other industries and bring it in? There's a lot happening on material innovation, and are we really learning quickly? That's the most. The other big worry always is, are we grooming enough talent for the sheer opportunities that this company sees?
How about you all?
Actually, kind of pioneer when it comes to smart glasses. I think I'm particularly pretty excited about anchoring this category in a country like ours. And we have just not even started. That's
smart glasses.
Smart glasses.
What would you say?
I'm super excited about Gen X, younger consumers, 15 to 25 years old. Traditional brand building, which worked for people above 25, 30 years old. I think the new generation of consumers, it'll be very interesting to see how they form preferences and how to build long-lasting brands and brand loyalty with them.
Let's look at Titan at 1 lakh crore. Now that we're speaking, by when do you think, realistically speaking, that aspiration should come by? And when that happens, what would the revenue mix of the company look like, according to you?
Reasonably soon, I guess, that figure will be reached. It'll still be substantially a jewelry revenue share because even internationally, the jewelry opportunity is very large. But the customer share of all other businesses will be markedly higher.
Right. And what about, any sort of, I'm asking this again only because I want to understand what you all are thinking on inorganic.
We are in a place where the new businesses are being built. And therefore, there is a certain preoccupation that needs from the central people like us. And we would like to prioritize these over an inorganic. And that's the reason why the answer that you're getting is sounding like a textbook answer. My job is to help build these new businesses, but keep looking at the same time if something comes along.
Final question before I let you go. The promoter sets the agenda, the management executes the agenda, the board enables that agenda. What is the agenda right now?
Actually, in the case of Titan, the board leaves it to the management to dream the agenda, frankly, and bring it to the board. The promoters are not separate from the board. So together the board, challenges the management, questions the direction, and then blesses and encourages all the way.
And the leader of Titan after you, what's the clarity on that?
Will be one more person from the company.
Take that point. Thank you so much, gentlemen and lady, for joining in and giving us a holistic picture of what Titan in the future would look like. Turbocharging the growth is what you've said. The street would definitely hope that you guys turbocharge the growth.